Hello, good afternoon. You have tuned into CNBC-TV18. You're watching Your Stocks with me, Vinny Motiwala. A quick look at what the market is doing. Recovered from the day's lowest point, and since the last time I've checked, now it's moved and inched up closer to 23,800 mark. Just a point away from that level. So 23,007. Okay, it's done. 23,800 there coming in for the Nifty in today's trading session, up almost 0.6% in a trade. Nifty mid and small cap also doing quite well. Mid cap has picked up pace. Nifty mid cap is up almost 0.3% in trade. Small cap is up almost 1% is what we are looking at as of now. So outperformance is coming in from the Nifty small cap. Nifty Bank also lending some support there, up 0.7%, trading almost near the day's highest point is what the Nifty Bank is doing right now. Other than that, let's look at ICICI Bank as well as HDFC Bank individually as well. They were among the top performers coming in for the Nifty contributor wise. So ICICI Bank and HDFC Bank also holding on to gains of almost 1% in trade. But yes, that's how the market is looking like, recovered from the day's lowest point. But this is a show where we solve all your stock-related queries, and we have our experts joining in with us, Astha Jain, Research Analyst at Securities, as well as Shivangi Sarda, Analyst, Equity, Derivatives and Technicals at Broking and Distribution at Motilal Oswal Financial Services, to answer all your stock-related queries. Good afternoon, Astha as well as Shivangi. Thank you so much for joining in with us on the show. Let's get started with the queries today. But actually, before that, I do want to talk about the market because 23,800 is back. Shivangi, good afternoon. And, do you think we'll be able to sustain that level, or, what are the levels that you're keeping an eye out on for the market?
Very good afternoon, Vinny. Thank you for having me. So we've seen that, the indices have been facing some sort of pressure at the higher zones. And even though there has been consolidation, but follow-up is kind of very tricky in this kind of a market. India VIX has been acting up. So overall, we would expect some certain volatility to continue in this series going forward. Some swings will be expected. January has always been, full of swings. Historically, we've seen it has been, kind of a trap for both the call and put writers. So definitely we'll have to, put on our seatbelts to trade in this series. But if you talk about the immediate level, 23,500 is an important make or break zone here. Today also it's respected those levels, and we've seen a pullback move from those levels exactly. Now, there has been some sort of buying, but again, we are facing some resistance at 24,000. So the call writers have to unwind their position at 24,000 for the next leg of rally. So hurdles are immediate basis 24,000, but then if it crosses this level, then it could head towards 24,500 marks. So keep your stance very hedged, and it would be advisable to play on a strategy note rather than naked buying or selling.
Okay, absolutely. Thanks so much for that, Shivangi. And actually, Happy New Year to both of you, Shivangi as well as Astha. I forgot to give you all those New Year greetings because markets surely is quite cheery today in trade. But on that note, let's get started with the stock-related queries. The first query we have today is coming in on Adani Total Gas. This one is from Suresh, who's writing to us from Bangalore. He's holding 20 shares of Adani Total Gas and bought the stock at a price of 890 rupees per share. Wants to know whether he should continue to hold or look to sell this. Currently making some bit of a loss here. Astha, what's your view on Adani Total Gas on the fundamentals? How is it looking like?
Hi, good afternoon to both of you, and a very happy new year to all the viewers, to your team and both of you. Now, talking about Adani Total Gas, I think this counter can show some upside momentum from here. The reason being, we have seen some sort of increase in their volumes. In fact, this company has opened some new CNG stations also. So I think going forward, whatever steps company is taking, definitely that will help the company in showing decent numbers going ahead. So our idea here is to stay invested in the counter. However, the cost price is high, so I believe that this stock has a potential to move upwards to the level of 800 to 820. So one can stay invested till those levels in this counter, because we believe that fundamentals are well placed, and whatever steps the company has taken definitely will yield results in the coming future.
Okay, and what's your view on this one, Shivangi? The stock, where do you expect it in terms of levels to move from here on, and what would you suggest the viewers should do?
So talking about this stock, we've seen that this has been in pressure from the last 3 months, and selling pressure is intact here. Although We've seen a recovery from 870 odd levels, but then overall this stock has been uh, quite a lot in weakness. So I would suggest one could actually wait and watch for this stock to again recover, and there are better stocks out there to again accumulate.
Okay, better stocks to that one could look to accumulate. That's a word coming in from Shivangi. Let's move on to the next query for the day. We have this query coming in from Vedanta, who's writing to us from Hyderabad, holding 30 shares of Kotak Mahindra Bank at a price of 1,700 rupees per share. Wants to know whether to continue to hold or look to sell this one. And Astha, what's your view coming in on Kotak Mahindra Bank? What is it that we're expecting from this private bank? Would you suggest the viewer, continue to hold Kotak or maybe sell and look at some other private bank is something as an option?
I think better idea is to remain invested for the initial price target of somewhere at around 1800 to 1870 odd levels. So now talking about this counter, what we have seen that now this bank is pursuing both sort of growth expansion strategies, that is organic and inorganic. So I think that will also help the bank. And we should always remember that it is the bank which has shown one of the highest NIMs among its peer set group. So going ahead, whatever strategies the bank will be taking place, I think that will help bank in posting better numbers going ahead. So we believe that this counter is well poised to show some more upside from here. And hence our view is remain invested in this counter with a price target of 1870 at the initial levels.
Okay. Shivangi, when you look at Kotak Mahindra Bank in terms of a stock move, in the last month, at least month to, what you're looking at, how would you see the performance versus other private banks? And do you think that, it's a possibility that the viewer should actually sell, or would you concur with Astha in terms of the view?
So we've seen that banking space has been in a little bit of a pressure from the last 2 to 3 series. Of course, rollovers were also quite narrow this time in the entire banking pack. But Kotak Bank specifically, series on series basis, nothing much has happened. Of course, if you look at the daily time frame, we've seen a lot of consolidation and within a band. So of course, Kotak Bank is at this moment, I believe it is a long-term pick, not a trading bet right now. With over 95% rollover in this particular stock, there's definitely strength as compared to the other banking counters as of now. But overall, this stock has had a history of having a volatile swing. So I would suggest one could remain in this stock for a longer time view, but not for the trading perspective. And next, we could expect somewhere about 1850 to 1900 levels.
Okay, long-term view coming in for Kotak Mahindra Bank. But let's move on to the next query. And this one is from a public sector bank query that is on Bank of Maharashtra. Harika is writing to us from Mumbai. She's holding 1,750 shares of Bank of Maharashtra. This is at a price of 64.8 rupees per share, currently making a loss on this one. Wants to know whether she should continue to hold or look to sell this. Astha, your view on Bank of Maharashtra?
So I think it's better to hold this counter with the initial price target of 58, although cost price is more, a little higher from these levels also. But I believe that maybe the results coming in will be a better one. Now, talking about this bank's fundamental, what is major attraction about their results is that they have surpassed their NIM expectation, because the management has itself guided for the NIM of around 3.75 or 3.8 odd levels, but their NIMs have come down to the level of 3.9. So in fact, they have surpassed their guidance, despite the fact that the cost of fund was the major concern. In fact, in the financial performance also, I think it was a decent set of a number with a stable asset quality. So I think this is one of the bank in the public sector space which has shown decent asset quality as compared to its other counterparts. And I think that is why there is a potential to move upside from here. No need to book any sort of losses at this point of a time. Better to wait for more upside. I think 58 is the target which we would like to give to this counter at this point of the time, but this target is subject to revision after the results.
Okay, so wait out for the results, and better asset quality is what you're highlighting versus other peers in the public sector space. But Shivangi, on the charts, what is it looking like for Bank of Maharashtra? Last 6 months, we have seen some bit of a correction, right? So, what would you advise the viewer to do?
Of course, Bank of Maharashtra has been in weakness, right where it made a top near 73 odd levels. And we've seen that the stock has been cascading down since then with absolutely no signs of recovery. Even in this year, we've seen that, we ended flat in the previous calendar year, and now some sort of buying interest can be seen from the lower levels, but again, it doesn't look very sustainable. So I would recommend, one could exit this stock. This quarter is very crucial for the private banks, and seasonality wise, also, we've seen that heavyweights tend to perform more than the smaller banking names. So I would definitely suggest to be with the heavyweight names if at all you want to be with the banking counter.
Okay, thanks for that, Shivangi. Let's move on to the next query. We have Indira Lakshmi, who's writing to us from New Delhi. She's holding for 50 shares of RVNL at a price of 259 rupees per share. Wants to know whether to hold or continue to hold or look to sell this and book out the profits in this one. Astha, what's your view on RVNL? We've seen those orders surely coming in, a lot happening in the railway space. Would you say the viewer should continue to hold, given that she's making a decent profit on this one?
I think partial profit booking is a better option at this point of the time because the investor has already earned a huge profit. And one thing which I am positive about this counter is that their order book, I think it's around 800 billion, which is almost 4x of the TTM revenue. Although in the Q2 of FY25, they were not able to perform strong performance on the financial front, and there were reasons behind it. First of all, due to the monsoon, there is a delay, and that's why we have seen the execution was not that strong. But going ahead, I think H2 of FY25 will be a better half year for these companies, and in that way, this company can be a beneficiary of that. So I think, but since the profits are high, so better to book partial or maybe 25% of the quantity. Profit can be booked in the 25% on quantity and remain. One can continue holding in this counter. We are expecting the price to move till the level of 460 to 470.
Okay. That's the view coming in. Partial profit booking is what Astha is suggesting. Shivangi, what's your view on RVNL, given that stock has seen a fabulous run-up in the last 1 year, all railway stocks, right? So what would you suggest, partial profit booking or just completely get out and enjoy the profits?
So absolutely, they've seen a good run-up in the first half of the year, but then the second half was quite muted for the entire railway pack. In fact, there was a time when these stocks didn't move at all and were absolutely derailed. But we've seen that, on the daily basis, the time frame, we've seen RSI is turning, trying to turn kind of positive. But I believe the confidence in this stock would regain after it crosses 440 levels. So it's a wait and watch over here at these levels. One could put a stop loss near about 400 levels for the next up move towards 460. But condition is that it has to cross above 440 for momentum to regain, or else it would again be stuck in a lackluster manner. But of course, around the budget, we do expect some sort of movements around these PSE sectors as well. So one could be, hopeful for this stock, but not much of a, upside that we're expecting here.
Okay, not much of an upside that you're expecting here. Maybe some budget-related moves that is expected and one could watch out for. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll be back with more of your stock-related queries after the break. Welcome back to Your Stocks on CNBC-TV18, and we still have with us our experts Astha Jain of Securities as well as Shivangi Sarda of Motilal Oswal Financial Services to solve all your stock-related queries. Let's move on and talk about the next query that we have. This one is on Vedanta. Parag is writing to us from Mumbai. He holds 125 shares of Vedanta at a price of 214 rupees per share. So making a profit on this one as of now for 444 is what the stock is trading at. Wants to know whether you should continue to hold this or look to sell. Astha, what's your view coming in on Vedanta? Obviously, there are certain concerns that come in terms of the debt side, but how does that work out going forward?
Yes, there are certain concerns, but even if I look after the growth plans of the company, like in case of their aluminum division, they have a growth plan of becoming fully integrated supply chain from mining to metal. And in fact, in the zinc division also, they have certain plans to ramp up the production. So I think with these growth plans and the focus, maybe company can show much better performance from going forward from here. And that is why I think if there is a no hurry to book profit, it's better to wait in this counter. Although at the initial levels, we are assigning the price target of 480 to 490. So hold is a strategy from our side for this count.
Hold as a strategy coming in from Astha. But Shivangi, what's your view on Vedanta?
So we've seen that this stock has been stuck in a very consolidative band recently, and after that we've seen that weakness has been derailed in this stock. But overall, it's near its support zones of around 430 levels. It's taken a bounce back from those levels, but this stock is highly affected by the global market and the whereabouts. So we're recommending that you could exit this stock. In the December series itself, we saw 94% rollover on the short side. So there has been short built up, and consistently selling pressure is intact. So definitely I would suggest one could exit and avoid it for a bit.
Okay, exit and avoid for a bit. That's a word coming in from Shivangi on Vedanta. Let's move on, and the next query is on Delhivery. We have KP Kumari, who's writing to us from Guntur, Andhra Pradesh. She holds 20 shares of Delhivery at a price of 400 rupees per share. Currently, the stock is trading at 348. So yes, the viewer is making a loss on this one. She wants to know whether she can continue to hold this for a time period of 2 years. Astha, what's your view in terms of Delhivery? Fundamentals, how is it looking like? Because the viewer still has a long-term time period, 2 years, so not bad. Could she continue to hold this?
I think she could, because in the near term, what we are seeing the price target till the level of 400. So maybe the cost price at which the viewer or investor has bought the stock, I think it has a potential to move at least till those levels. So there is no need to book losses. Now, talking about fundamentals of this counter, first of all, they are market in the 3PL segment. And one of the major attraction or the focus point of this company is that they are profitable one if I compare it to their other counterparts. So the profitability is there, where the major attraction is because of the profitable nature of the business as well as a market leader. Although they are facing some concerns in their B2C segment, but I think going ahead, definitely that will get solved out. So more or less, I think this stock can move on the in the northward directions, and hence we are positive on this counter, recommending a hold with the initial price target of 400.
Okay, and Shivangi, what's your view on the technicals for Delhivery? Last 6 months, very muted, right? Nothing exciting that has happened in the stock. What should the viewer be doing?
Absolutely. We've seen that, in fact, in this last 6 months, we've seen that the stock has exactly, maintained its channel bands. And we've seen that there has been a little bit of a recovery in the RSI segment. It's trying to turn positive, but again, follow-up is absolutely missing here. But overall, new age companies are in a lot of focus, and we've seen that this sector is looking quite positive. So I would actually recommend being in this stock for a bit. Of course, there is no quick movement that we're expecting. It'll require some bit of patience, from the investor side. But of course, this stock is getting poised to touch around 380 odd levels. So recommending to be here with a stop loss of around 340 levels.
Okay, keep an eye out on that. But let's move on to the next query. This one is on Mishtann Foods. We have Syamala, who's writing to us from Hyderabad. She's holding 1,720 shares of Mishtann Foods on an average of rupees 21 per share. Wants to know whether to continue to hold or sell this. Astha, do you have a view on this one? It's not someone a stock that you normally track regularly, but Mishtann Foods, what's the word?
I think this company, they have they are basically into the rice, and they are exporting to USA, UK, Singapore, I suppose, apart from the domestic sales also. And the financial performance were also, not very strong. And here the major point is that there is, I think, no use of exiting at these levels, because if one make a exit at this counter, the losses will be huge. So it's better to wait, because already I think the investor has bought it at rupees 21. It is going at 7. So I think it's better to wait for more triggers to come in. Maybe the result can be one of the triggers. I think it's better to wait. Otherwise, losses will be huge. And that is the only reason I'm not recommending to exit at this current level. So here, our stances hold at least till the results come.
Okay, hold till the results come at least. And Shivangi, your view?
So this is, very rightly pointed out that this is a stock which we don't really track on a very regular basis. But of course, if we look at the technical charts, the volumes are a little shallow. And we've seen that this entire sector has been a little muted. If we talk about the entire consumption FMCG pack, there has been some sort of recovery and short covering move seen. But overall, this sector has been a little dented from the last 2 to 3 months. So if you talk about the sector tailwind, of course, there could be some sort of movement, but this particular stock has not really witnessed much of a follow-up buying. So it'll require a lot of patience. So I would definitely recommend exiting some positions at least, and to utilize the funds for a better opportunity.
Okay. Thanks for that, Shivangi. And that was the last query for today. So Astha as well as Shivangi, thank you so much as always for joining in with us and solving our viewers' stock-related queries. But with that, we're absolutely out of time on this edition of Your Stocks on CNBC TV 18. Thank you so much for tuning in. Up next, closing bell.